Hello, welcome to European Open Briefing for Tuesday, January the 8th. I'm Rafael Jan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So we're seeing more risk-on sentiment this morning. There's a positive start in Europe, and yesterday we had further gains on Wall Street. So there is some optimism that those trade talks between the US and China that started yesterday will bring some positive results. The dollar is edging higher this morning. We are seeing a bit of a recovery in US Treasury yield, so that's helping the greenback, and we're seeing the euro and the pound weaker against the US dollar this morning. And despite that risk-on sentiment, the Aussie and the Kiwi are down against their US counterparts. That could be down to some profit taking given the recent strong gains. The loonie is the exception. However, it is up around 0.1% at a near 1 month high on the back of higher oil prices. We are seeing this morning WTI up by a quarter percentage points to around $48.64 a barrel. Brent crude is also up on reports that we could see Saudi Arabia making cuts to its exports by end of January. And we also have a Bank of Canada policy meeting tomorrow where the BOC could maintain a hawkish stance. So all of that is helping the loonie. And let's now turn to the dollar. We can see here in the chart that dollar yen has more than recovered its losses from that flash crash from last week, which came after that Apple's profit warning, which fueled fears about a major economic slowdown in the US and in the rest of the world as well. But since then, we've had a strong jobs report. We had remarks by Fed Chief Jerome Powell, where he said the Fed will be patient, and of course optimism surrounding the US-China trade talks. We had comments from US Commerce Secretary Wilbur Ross saying that there's a very good chance that there's going to be they're going to reach an agreement that both China and the US can live with, and as a result we are seeing dollar yen testing the 109 level. Turning to sterling, we can see sterling not doing too badly despite the Brexit uncertainty. Parliament looks set to reject the Brexit deal. That vote is expected to come on January the 15th, and also we are seeing EU officials, including the Irish Prime Minister, saying that the EU could give further assurances regarding the backstop issue. That still doesn't seem to be enough to convince UK lawmakers to vote in favour of the deal. And now we're also seeing reports that the UK and the EU are discussing possibly extending the EU exit date. That's on March the 29th, although the UK government has denied that. Despite all that, sterling not doing too badly at around 1.2750 at the moment. And looking at the loonie, we can see those sharp gains over the past few days. It had previously slumped to 19 months low. Now it's trading at a 1 month high at around 1.3285. So obviously the recovery in oil prices has helped that rebound in the loonie, but also the Bank of Canada policy meeting that's due at tomorrow. We could possibly see some hawkish signs there still, even though markets have pretty much ruled out a rate hike by the BOC in 2019. A possible hawkish surprise could see those rate hike expectations being priced back in again and would lift the loonie even higher. And a quick look at oil prices. They are currently trading at 3-week highs. There's reports saying that Saudi Arabia could cut exports by 800,000 barrels per day by the end of January. If those reports are confirmed, we could see possibly further gains in oil prices in the coming days. And of course, the outcome of the US-China trade talks will also influence that greatly. That's it from me. Thank you very much for watching and have a great day.